And good evening. This is the Elliott Wave update for the S&P 500 for Monday, January the 31st, 2022. The buyers may remain strong again today. In fact, they bought all the way up all day into the close and only began to pull back as Globex opened this evening. So let's take a quick look where we are, what we can expect, and what possibly would be the alternate view. So I continue to look at this as the possibility of it just being the minor fourth wave with a minor fifth wave decline with new lows below 4,213 before this first five-wave structure down is complete. Now, what could really interrupt that and negate it? The fact that the market does continue to rally, gets above 45.38, which is the 618 retracement level, pushing it a little bit bigger than what should be expected. Not that a 618 retracement for a fourth wave is an impossibility, it is not. But I am not expecting it, and it is not common. But here's what this move cannot do. As a fourth wave, it cannot go above, come on. There it is, 45.73. If it breaks above 45.73, the current count is negated. And if that happens, then what is going on? So let me show you the alternate of what I would then relabel it. And it doesn't really negate any of this downside. And it doesn't negate what the upside is doing. It just puts it in a different context. I could be that I need to move and put the minor 5 here, the minor third here, this being the minor 4, and then the balance being minor 5, the completion of intermediate wave 1. And what is all this? This could be wave A of 2, wave B of 2, and we're into wave C. And in my count, it could be 1, 2, we're working on the third, 3 of C, we got a 4 of C and a 5 of C, all within the second wave. Now we know that a second wave has the capability of going up and retesting almost the top. This is where wave 1, intermediate wave 1, would have begun. So we still allow for this huge push back up towards the highs, all-time highs, and we solve the dilemma of the strength that the market is showing in the current position of the Elliott count. It fits much cleaner in a wave 2 than it does in a wave 4. I'm leaving this right now, but I need to make sure that we all understand that there's a very strong possibility of this being relabeled. It doesn't mean that I'm wrong. It doesn't mean that anybody else is wrong. It just basically suggests that we do follow what the market is telling us, and that the count itself remains fluid, and that this could have completed the intermediate wave 1. So this would still be the first 5 waves down. And then we're in a second wave, which has the potential to really carry the market all back up into these levels. And I may switch that before the end of tonight, but I'm leaving it right now as is. And I'm filling in that blank by telling all of you that I basically would feel pretty strongly above 45.38 that that's what it is. And I'd start to be, if this puts in another strong rally tomorrow, then I'm almost convinced that that's exactly what's going on. So how does that fit in to everything that I've been talking about? Number one, it puts out into the future that major decline that I've been talking about that we're still going to get. It does not change this high at all. That remains in place. It does not change the larger corrective phase being in progress. It just updates the initial decline, putting an intermediate wave 1 here, putting an intermediate wave 2 wherever this would end up, and then an intermediate third wave, which would be more devastating than a minor 5th wave. An intermediate third wave would be very, very intense to the downside. So I'm still looking for those intense downside moves. I am just covering our bases for what's happening. Why suddenly do we have all this bullishness reverting and coming back into the market? When you study Elliott, part of what Elliott talked about, a part of what Robert Prechter talks about a second wave, they're a wonder. They're like a third wave. They're a wonder to behold. Second waves can and are very possible to retrace nearly all of wave 1 as the market reverses from what it's doing to returning to a previous trend. That's pretty much what's happening. And if traders and everyone starts to believe that's it, we've reached our low, we're now going back up and we're going to new highs again, they're doing it in a fashion that they're feeling they're missing out. I'm late, I have to get in, I got to get back in. And we're seeing that happen in some of these stocks. We're certainly seeing it in Apple. Now we're seeing it in Tesla. Both of them having a decent heavy weighting here in the S&P. We still have Titans to report this week. They are AMD, they are Amazon, Facebook, Google. We have PayPal coming out, I believe, next week. Let me just double check. But I don't know if PayPal is a part of, no, PayPal reports tomorrow. I don't know if they're part of the S&P, but I know that AMD, Amazon, Google, and Facebook are. So we still have them to report. We have a hedge fund who's decided that Tesla got to an attractive level, and so they're deciding to buy it. That's fine. Everything will fit into how we count it. But I always have to let the market tell me. So this is my estimate for right now, but I'm telling you that I'm leaning very strongly to switching the count, cleaning that up a little bit, putting the 3 and the 4 in there and leaving this as the 5. So this gets moved up, this gets moved over, the 5 gets there, it gets put an intermediate 1 underneath it, and we're in intermediate wave 2. In fact, we've completed quite a bit of intermediate wave 2. With an A, a B, a 1, 2, 3, 4, and a 5 to complete wave C. That's how I'm going to leave it. And continue to trade according to what the price action is telling you, to what the market will be telling us, and don't get married to either side. The market will tell you when the turns are coming. Follow the moving averages, follow the Fibonacci, follow the price action. It's never going to be wrong, and I'll tell you why, because remember the premises. The market is always perfectly priced, and the market is always correct. I stand on those. Next update, Tuesday, the 1st of February.